Good morning. Oil Vey. As we speak, oil prices continue to tumble, dropping towards 11-year lows in overseas trading. Oh my! And then there's the Fed on Wednesday. You know, futures were a little changed from last week's bloodbath, so I'm okay with that. But you know what? I just want to talk about oil today. The truth is, I knew for a certain fact that oil prices would continue to crash, and I said so, but I never suspected that it would have this effect on the markets. See, when the broad is wrong, she owns up to it. I guess I forgot one of my basic principles of trading, which is that no matter how much you focus on fundamentals, it is ultimately only market sentiment that will prevail. You know, the latest rout was fueled, so to speak, by the last OPEC meeting. What's OPEC? I'll let you know later when I find out. Where Saudi Arabia refused to budge and cut production in an effort to screw Iran and Iraq, and maybe thinking that this would be a noble thing to do for the US and Canada. And more about that later. You know, were they cutting off their nose to spite their face? Maybe, and maybe OPEC's last cry, because the reasoning behind that decision was not financial, but political. You know, I always say never mix business with pleasure. You know, all those little countries in OPEC just sat by and allowed Mama Saudi Arabia to get away with it because I'm the Omni, that's why. Some of us tree huggers in the US are both glad and sad. Glad because oil producers are being driven to the ground, and sad because cheap oil is not doing anything to promote the more expensive alternative fuels that we all love. And all of you who love conspiracy theories, I don't know, think about that one. And the irony of it all is that while all this oil stuff was going on, the very sluggish, thick as oil global climate talks were taking place in Paris. You know, maybe indeed Saudi Arabia's move was well timed to sabotage the very meeting that would put oil back where it belongs, underground. So let's look at some numbers. Since the year 2000, West Texas Intermediate has traded between 147 and 26. Yeah, this is not new, folks. Now, of course, many experts are calling for much lower oil prices to continue to crash. I don't know, maybe, as I said before, in an effort to just divert their attention from Fed speak. The quote of the day goes to First Trust CIO Mike Mullaney, who said, quote, "At an all-in cost of production of $60 a barrel or more, frackers are toast," unquote. I'd like my toast with butter and jam, please. More numbers. The US is by far the largest oil consumer in the world, gobbling up close to 19 billion barrels a day versus China at 10.5 billion. Wow, you must be thinking that China, with a population of more than 4 times that of the US, should at least consume as much oil as we do, right? I hate to say it, but no. But wait, there's more. We are also the world's largest importer of oil and the world's largest producer of oil. So you say, 2 out of 3 ain't bad, right? I mean, we import at a lower cost, we consume at a lower cost and put money back in our pockets. And so what if we're driving many domestic producers to the ground, so to speak again? You know, we really could be jumping up and down with joy, right? Well, you know what? I'm going to show you a picture worth 1,000 words, maybe 2 pictures. Here's one. And here is 2. And you know what? I'm going to change the subject and let you think about that. I don't know. I'm just wondering if Janet Yellen and the Fed governors are savoring the moment, or wondering if it would not be wise to kind of wait a while instead of adding more insult to injury. Yeah, I know. I said for a fact that the Fed will lower rates, and I guess I'm going to stick to my guns, but let's admit that a rate hike this week will be hard on the markets. And besides, I love being a contrarian, and I just read somewhere that there's not one economist in the US that doesn't think there's going to be a rate hike. I mean, really? So I guess my question is, so where's the risk? Well, my friends, the risk is on the upside for the markets. The surprise element. Either the Fed doesn't raise the rate, or the rate raising is fully discounted into the markets, which it is, so to speak. So, so if I was a crazy trader like I used to be, and I love to be, then I guess I would go into Wednesday long the S&P futures and look for a reversal of the trend, as the market is either surprised by no rate hike or fully expecting it, but that's already discounted, right? So they're going to reverse their short positions, period. But you know what? I'm not the crazy trader I used to be, although I still keep the crazy but not the trader, and I'll just stay home and enjoy the fireworks. This is Abroad with a View. Thanks for checking in.